Today, Anthony Scaramucci says he and other advocates are engaging with Kamala Harris's campaign to develop crypto policy. Terraform Labs gets the green light to wind down the company through bankruptcy. And Greg Benheim of 3IQ discusses how investment advisors feel about crypto ETFs. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies are mixed this Friday morning, with Bitcoin flat by noon Eastern. Ether, meanwhile, climbed above $2,500 and XRP dropped to 58 cents. Now, looking out at the past week, Bitcoin got a boost from the Fed's decision to cut interest rates for the first time since 2020. It's up about 5.5% in the past 7 days, while Ether is up 5.75% in that same time. Now, Bitcoin holding company MicroStrategy has taken advantage of the turnaround in Bitcoin and announced a purchase of more than 7,400 Bitcoin worth about $450 million. MicroStrategy's stock rose about 1.8% by noon Eastern. All right, let's talk about the top stories. Vice President Kamala Harris is engaging with advocates to develop her campaign's crypto policy. That's according to Skybridge Capital's Anthony Scaramucci, who told a panel at Token 2049 that he and other crypto insiders are working with the Democratic presidential nominee. He also said that advocates are working with her to make crypto a bipartisan issue in the U.S. and to help distance Harris from Democrats who have historically been harder on the industry. Scaramucci had endorsed Harris for the upcoming election, and the Harris campaign did not immediately respond to CNBC's request for comment. Meanwhile, former President Donald Trump has publicly positioned himself as the pro-crypto candidate of the race, having headlined at Bitcoin 2024 in Nashville and involved himself in Web3 projects like NFT releases and the yet-to-be-launched DeFi platform World Liberty Financial. Next, Terraform Labs has gotten approval to wind down its business in bankruptcy. The federal court in Delaware that's overseeing the company's bankruptcy process approved the Chapter 11 plan in a filing on Thursday. Now, this approval comes after the collapsed crypto company reached a roughly $4.5 billion settlement with the SEC after being found liable for defrauding crypto investors by a jury. Reuters reports that Terraform Labs now estimates it could pay up to $442 million back to investors as part of its bankruptcy plan. Meanwhile, its co-founder Do Kwon still faces criminal charges in both the United States and South Korea, but those trials are in limbo as his extradition from Montenegro remains uncertainly. As recently as August, Montenegro's Supreme Court ruled to send him back to his home country of South Korea after a lower court ruled to send him to the U.S. Last, the FBI arrested two men it claims were responsible for the theft of $230 million worth of Bitcoin belonging to one individual. The indictment, which was unsealed yesterday, alleges that the defendants, Malone Lamb and John D. Serrano, communicated with victims to fraudulently access their accounts, leading to the loss of 4,100 Bitcoin. That indictment also claims that they moved the stolen Bitcoin through crypto mixers to conceal their possession of the assets. Lamb and Serrano are facing charges of conspiracy to commit wire fraud and conspiracy to launder monetary instruments. All right, let's go back to Future Proof 2024 one more time for our main story. Greg Benheim, Executive Vice President of Product and Head of Trading for digital asset investing firm 3IQ, sat down with Crypto World's Tanea McKeel to talk about adoption of crypto ETFs and an interest in digital assets from investment advisors.
Well, thank you so much for joining me here today. 3IQ brought the first Bitcoin exchange-traded product to market in 2020. This is really, kind of the year of the Bitcoin ETF in the US. What do you make of the way things have played out here this year?
Well, first, I'm surprised that it hasn't arrived sooner. It took quite a bit of time for the US to get on board. While it's largely been the most successful ETF launch of all time, there are some nuances that people don't necessarily realize. This isn't most of the inflows here are not long only people who are holding it for long term. You have a lot of people that are doing different arbitrage strategies with it, market neutral plays on the basis trade, market making with it. So I'm excited for the adoption that's been brought here right now, but I still think it's a lot slower than people do realize. And overall, the US is starting to take a change in its tune and bringing Bitcoin to the market. We're seeing it with advisors right now, but we're still in the very early stages of the overall adoption, and we have one vehicle where it's easy for people to access, but overall there's a lot of work that still needs to be done.
So you guys have really led in innovation. You also introduced a Solana ETP. Would you say, it's just so different from here in the US. So I think here in the US, people are very laser focused on Bitcoin and Ether. not really ready for Solana or the next token after that or the next token after that. What is the market like in Canada? Do you think that investors are ready to move beyond Ethereum and Solana?
So just to clarify one thing, we filed to launch the first Solana ETP. It hasn't been approved yet. We're hopeful that it is approved shortly. We do think that they are certainly ready. Having spoken to advisors both at home and here at this conference, they are well aware of Bitcoin. They're well aware of ETH, but it's only 1 to 3% of their portfolio, and they don't have the time to spend to become subject matter experts on such a small allocation of their model. So that's where they're starting to look at alternatives, be it Solana or the broader crypto market as a whole. It's largely why we're here. We're partnering with CoinDesk Indices, and we're launching the CD20 3IQ Index Fund. The goal is to offer broader crypto exposure, to follow similar index rules that the S&P 500 follows. So it's market cap weighted with capped constituents, 30% for the largest constituents, 20% for others. And we believe that a single passive investing product in the digital asset space is needed. Right now there are a few, but there's flaws to those products, and we're excited to bring this one both to Canada, to the US, and globally as we continue to expand.
So what has this conference been like for you? Because this really is an event for advisors, which I understand are, can be a challenging group to engage with on the asset management side. What are you hearing from them, and how are these conversations that you've had here this week kind of informing what is driving innovation in your next product?
Sure. So I came here more on a sales mission, and I'd say my takeaway is it's been far more educational. I am speaking to advisors who have actively sought out investment managers offering crypto products, which is a small subset of the advisors here. And within that spectrum of advisors, some of them know nothing about crypto, and some of them are the ones that brought crypto to their firms and just kind of wanted to hear what we're doing. So all this to say, out of a small subset of all the advisors here, there's some, and those that are actively seeking us out, some know nothing about crypto. That's how early we still are, but they're starting to ask the right questions. Things that, how can they explain this allocation to their clients? What percent should they be looking at? What bucket of the asset class should they be putting this in? How can you compare it to venture capital or private equity when it's a completely liquid asset, which is one of the major selling points of it as an alternative asset? So my takeaway from this is the process has started. They are asking the right questions. There certainly is, it's become apparent, a generational gap. The advisors with older clients are less interested because there's just no client demand there. And when your entire network of clients is above 60 years old and not necessarily requesting these clients or these kind of products, there's no reason to reinvent the wheel and start offering it with the potential risk of something going wrong and losing those assets.
Well, like I said at the start, this really has been the year of crypto ETFs, and it feels like we are on this, like you also said, educational journey with institutional investors and advisors. How dominant of a theme do you think this remains going into 2025, or do you see something else kind of taking center stage?
So my hope personally is that Bitcoin adoption outside of ETFs and just more broadly purchasing Bitcoin, interacting with the network, continues to grow. I do understand, and part of this educational process is most people will not have access to Bitcoin. Most people rely on their financial advisors to make those decisions, and for custody reasons and whatnot, they need access to similar products, ETFs or ETFs alike. I do think that it's going to grow, but it needs massive regulatory change and it needs massive regulatory guidelines to be put in place. Single asset ETFs have grown adoption, but there's nothing special or sexy about them. What I'm excited about is once we have multi-asset ETFs in the space, that's going to require regulated futures, both in the US and in Canada, for a wide array of assets outside of Bitcoin and ETH. Or it's going to require the authorized participants, the banks, the market makers in the space to evolve and start hedging on products that, such as perpetual swaps and other derivatives in the space that they don't traditionally do because they don't exist in normal markets, but they do exist in the crypto space. So all this to say, it's going to continue to grow, but there is evolution that's needed both on the regulatory front and potentially in the actual TradFi sphere itself.
All right, that's all for Crypto World this week. We'll be back on Monday, and we'll see you then.